Houses cost millions overnight. Banks, dead. Your pension, gone. All because loans went to 0% forever. Let's run this simulation. Imagine tonight we fix borrowing. No interest. Ever. Banks can't charge you to take a loan. Finally fair, right? Tomorrow morning you wake up rich. You finance a house, a car, maybe 3 houses, because why not? Keeping your own money would be stupid. So everyone rushes to borrow as much as possible. At the same time, here's the issue. Banks don't have unlimited money, so they must create it. Digit by digit, loan by loan. Prices react first. Homes double, then double again. Because when money is free, the only scarce thing left is stuff. A week later, your cheap mortgage costs more than the mansion used to. Congratulations. We fixed interest and deleted affordability. But that was just the first week. The scary part isn't the explosion. It's what happens after the dust settles. Because if you set the price of money to 0 forever, you don't just get inflation. You get a total rewrite of society. Today, we run the full simulation. From the death of banks to the rise of the zombie economy. Welcome to the world of zero. Phase 1, the free leverage explosion. Why did prices double overnight? It's not magic. It's math. Let's say you can afford $2,000 a month for a mortgage. In the old world, at 7% interest, the bank eats half your payment. The math limits you to borrowing around $300,000. You get a shoebox. But in the new world at 0%, every single dollar hits principal. That same $2,000 now supports a $720,000 loan. You didn't get richer. The math just changed. You think, great, I'll buy the mansion. But everyone else has the exact same math. The seller knows you can borrow $720,000. So the $300,000 shoebox instantly becomes $720,000. The infinite bid begins. Homeowners become paper millionaires overnight. First-time buyers are locked out permanently. And it's not just housing. Apple and Tesla realize they can borrow billions for free. They borrow massive sums and buy back their own stock. Markets melt upward. CEOs look like geniuses. Until the banks break. Phase 2, the banking extinction. 6 months in, banks run on a spread. Borrow at 2%, lend at 5%, keep the 3%. If they are forced to lend at 0%, revenue collapses to 0. But expenses don't disappear. Servers still run. Employees still get paid. Buildings still need power. So lending stops. Here's the paradox. Rates are 0%, but credit availability is also 0%. You want a loan? Too bad. No private institution will lend at a guaranteed loss. Unless you pay an administration fee. Sure, the loan is 0% interest, but there's a 20% monthly processing charge. The price of money didn't vanish. It just went underground. The shadow rate is born. Phase 3, the zombie economy. Recessions normally clear out weak companies. Bad businesses fail. Capital reallocates. But if debt is permanently free, nobody dies. Losing money? Borrow more. The system fills with zombie companies. Firms that produce little but absorb labor, capital, and oxygen. And then comes the silent crisis. Pension funds rely on 4% bond yields to pay retirees. With yields at 0%, those funds become insolvent. Grandma waits for her check. It doesn't arrive. Insurance companies can't meet guarantees. Retirement systems unravel. Millions of retirees suddenly have nothing. The government steps in. Phase 4, the Feudal Reset. Private banks are gone. So the state becomes the lender of last resort and first resort. Welcome to government-issued digital currency. You want a mortgage? An algorithm reviews your file, not your credit score. That barely matters now. It checks your compliance record, your behavior history. Money no longer has time value. So people rush into assets that do. Gold, land, art, Bitcoin. We drift into a new feudal system. Those who own scarce assets become kings. Those who earn wages in endlessly printed currency become serfs. The verdict? Governments win. They can borrow forever. Asset owners win. Prices trend toward infinity. You lose. You can't make money permanently free without breaking the structure it holds together. Subscribe to Common Sense Finance before the next fix rewrites the rules again.